Hi, my name is Glenn Hasselman. Just making this video for the free accounting software users to show you guys how to use free accounting software. In this video I want to cover off some things about allowances and how to report allowances in single touch payroll phase 2. There is a useful document put out by the ATO, in fact a very useful document called Single Touch Payroll Phase 2 Employer Reporting Guidelines. It's not just about allowances, it's about single touch payroll phase 2, which changed quite a lot and is a lot more detailed than single touch payroll phase 1. So it is useful as a reference for employers. Now I'm going to scroll down and just go directly to the allowances section. So reporting the amounts you have paid, and then there's a section on allowances. Now things sort of changed between phase 1 and phase 2, and in phase 2 we're reporting a lot more detail. So they call it also disaggregation of gross. So instead of just reporting, a lot was just reported as gross pay, but in phase 2 breaking out all the detail. So phase 1 allowances were only the allowances that were actually not taxed. So if it was going to be taxed, you would just put it under gross pay and tax it. In phase 2 they want to see the detail of the allowances even when they are taxed. So there is some the other thing to consider. So the first consideration is when you're paying something is whether you should be withholding tax from it. Another consideration is what box you should report it in, what allowance type in this case. And a third consideration is should you pay super on top of that allowance. Okay, now in terms of the whether you should withhold and should superannuation apply, there was some generic kind of conceptual information that I found that was quite useful. And this is a document called the Business Implementation Guide, which the ATO produced. It's probably targeted much more at software developers rather than business owners, but I thought this was quite useful. So considerations for pay-as-you-go withholding is, are there ATO measures? So does the thing you're paying have ATO rates or thresholds published relating to it? And if it does and you are within those thresholds, then they're saying no pay-as-you-go applies. Okay, so keeping in mind this is at a generic kind of conceptual level, and just background information, and you'll refer to the other document that I pointed out when paying something specific. So, but this is a sort of general conceptual level. So if there's ATO measures, no pay-as-you-go, and you're within those measures, no pay-as-you-go. If there's ATO measures and you're going above those, then what they're saying is that the amount in excess is taxable. So for the amount up to the threshold, you're right, you don't have to withhold against it. The amount in excess, you have to withhold tax. If there are no measures defined by the ATO, then pay-as-you-go applies to the full amount. So let's say, for example, considering a motor vehicle allowance or a car allowance, then if you're paying a cents per kilometre rate and that rate is within the ATO threshold, then you don't have to withhold tax. If you go above the threshold because you paid a rate that was higher or you went in excess of 5,000 kilometres, then you have to apply or deduct tax from the amount in excess. If you decided, hey, I want to pay a fixed amount per week, regardless of the kilometres travelled, or the amount you're paid wasn't directly related to kilometres travelled, then you'll be in this third situation where there are no measures defined by the ATO. That means pay-as-you-go applies to the full amount. So that's the conceptual, that's an example, but these are the basic concepts for pay-as-you-go withholding. On the question of superannuation, the basic concepts are, if there are ATO measures and you're within those measures, then it's excluded from salaries and wages, so there is no superannuation. If there are ATO measures and you are in excess of the ATO measures, what they're saying here is you as the payer need to assess if you expect that money will be fully expended in the course of providing their services. And if they are going to fully expend it, then there is no super. Okay? They're saying it is excluded from salaries and wages. Okay, so then there's no super. However, if you assess that it's not likely that they are going to expend it in full, then it is salaries and wages. Doesn't mean super applies, but it is salaries and wages. And if it is salaries and wages, and it is within the ordinary hours, which it probably is, then superannuation does apply. Okay, so if you're in excess of the ATO measures and it relates to ordinary hours, then superannuation will apply on it. Okay, so that's the basic concepts for pay-as-you-go withholding and superannuation. So going back to this document, and this document I don't think it really covers superannuation so much, but this covers the pay-as-you-go withholding and whether to and which box to report it in. So as an example, if we consider a motor vehicle or car allowance. So, and before we do that, actually, there's some information here which is useful on allowances that you should read. So I just want to point it out. I won't read it, but if you are setting up an allowance, you should read that information on the allowances. Anyway, I'll go back up here and click through to the cents per kilometre allowance. So if we go to the cents per kilometre allowance, they note that the allowance is used for reporting both cents per kilometre allowances that are within the ATO measures and also ones that exceed the ATO measures. So it could be taxed or not, depending on that. Tells you what to include and what to not include. So it says some other things that people might commonly think would be reported under, or might have previously reported under, a car allowance. We don't report them under cents per kilometre allowance. So where it wasn't deductible, for example, so if they're saying for home to work, it's not deductible, so it shouldn't be reported under this cents per kilometre. vehicles other than a car. Okay, so that includes a motorbike or a van, or a vehicle which has a 1 ton or more carrying capacity, and they get reported under this other allowance type. Other allowances with description V1 private vehicle. Okay, or a flat rate for a car allowance. So it's an fixed amount per week, not referable to the kilometres travelled. Be reported as allowance type OD, or other allowance, V1 private vehicle. Okay, so this document here that I'm pointing out is, you can see how it's an essential reference when you're paying an allowance to make sure you're paying it in the right way. Now, if we go to free accounting software, I just want to show you how the setup of the tax codes relates to the document. So I've set up this business for the demos, and I'm on the tax code page already. Now, in the default chart of accounts, there's this tax code cents per kilometre dash non-taxable. The setting that is important and relates to what was in the ATO document there is this one called STP/TPAR gross classification. So these settings are also used for the taxable payments only report, but we're looking at single touch payroll now. So so the setting here says gross classification, and the setting says is set to allowance dash cents per kilometre dash non-taxable. So that means when I pay an employee something using this tax code, it's going to get reported in the cents per kilometre box. The dash non-taxable means that the system will not withhold tax from it. Okay. There is another option here, allowance dash cents per kilometre dash taxable. Now that gets reported in the same box as we saw on the ATO document. It said that allowance is used for both taxable or it's used for both allowances that are within the ATO measures, therefore not taxable, and it's used for allowances that exceed the ATO measures, therefore taxable. And this option here would report it under the cents per kilometre box. The only difference being that the system will actually withhold tax from that amount. So if you've got a taxable one, you just need to set up another tax code and copy this, but then set that to the taxable option. The other thing to point out is that there is a whole bunch of other options here, and of relevance to the motor vehicle is that there is this allowance dash other dash taxable dash V1 private vehicle. Okay, and that one is used as stated on that ATO document for when you're paying an amount that's not referable to the kilometres travelled. So you didn't, it's not directly related to the kilometres that the person has travelled, such as a fixed amount per week. Okay, just give you a quick look at the payslip to show you how these get reported to complete the picture. In fact, I'll just go in through this payslips page here. When you go in through the payslips page here it will actually automatically create a batch for you, but anyway, let's say we put in the cents. Actually, it's called car allowance at the moment. I will change that in the default. So it used to be called car allowance in the previous version of the software. I'm going to change that to be called cents per kilometer, just to make it very clear that it's on a per kilometer basis. You might have, they might have traveled 20 kilometers and it's at 76 cents. I guess, I'm not 100% sure, I keep forgetting, but you can Google it, you know. And tax code has come up cents per kilometer. Now, having done that, you should also check. So if you scroll down to this section here, it says pay event info. You know, when you're setting up tax codes, you might not be 100% sure if you've done it right, but the things to check are whether it did actually withhold tax from it. So you, in fact, in this case, it hasn't even put the box for pay-as-you-go withholding there, because there is no other pay-as-you-go withholding on this payslip. So it hasn't withheld tax. And the other thing to check is how it looks on this lodgement. So here, if we scroll down to the, and I'll just point this out, this heading pay event info, all of this information is what is sent to the ATO. So the other information outside that does not get sent to the ATO, although some of it is reproduced down here, but this is the information here that gets sent to the ATO. And of relevance to the current discussion is this allowance dash cents per kilometre, $15.20. That is a year-to-date figure. It's just so happens to be the first payslip I've entered in this ledger here. So that's where it shows. If it wasn't being displayed there, or it was displayed under a different box, then you know something's wrong with the setup and you know to go and fix it. Alright, I hope that shows clearly how to pay cents per kilometre, but more generally gives you an idea of how to set up allowances. And I hope the video has been useful, and thanks for watching.